Welcome to Mistine Deep Dive. Today I'm diving into BTCI, that's the NEOS Bitcoin High Income ETF. This fund seeks to help investors earn high monthly income while still being exposed to Bitcoin's price moves. It does this through a covered call strategy layered over Bitcoin ETPs. Let's unpack what that means and whether it fits your goals. What is BTCI? BTCI holds shares of Bitcoin ETPs, like the VanEck Bitcoin ETF, and pairs those with a data-driven call option overlay. At its core, it buys Bitcoin exposure, then sells call options to generate cash that gets passed to you. This setup provides income but caps the upside of Bitcoin's price. How BTCI makes money. Each month, BTCI sells call options against its Bitcoin ETP holdings. Those sales generate premiums. This cash becomes monthly distributions to investors. As of the latest update, the fund's distribution rate is around 30.25% per year, paid out monthly income potential. A yield above 28% has been seen lately. With distributions of roughly $1.50 per share each month, BTCI serves investors chasing strong, consistent income. Dividend Tracker. Here's a sample of monthly payouts. January, 1.57 per share. February, 1.43 per share. March, 1.33 per share. April, 1.25 per share. May, 1.51 per share. These payments change monthly based on option premiums and Bitcoin's volatility. How it compares. Compared to Roundhill's YBTC Covered Call ETF, BTCI launched later but sports a similar structure. Year-to-date returns are nearly identical, 12.77% versus 12.26% for YBTC. Both use covered calls, but BTCI holds Bitcoin more directly and uses a slightly higher expense ratio at 0.98% versus YBTC's 0.95% price stability and volatility. BTCI is volatile, Bitcoin's price swings often, yet selling calls introduces some income cushion. Its volatility is slightly lower than YBTC, about 41% versus 44% annualized, and the maximum drawdown has been around negative 24% tax efficiency. The ETF labels most distributions as return of capital, 97% as per its 19A1 notices. That classification, combined with Section 1256 tax treatment for options, generally makes the income more tax efficient than standard dividends risks to know. BTCI is still tied to Bitcoin volatility and regulatory uncertainty. It's also a new fund launched in October 2024, so it has limited history, and the covered call structure limits how much you can gain if Bitcoin makes a sharp run. When to sell. Consider exiting BTCI if you expect a strong Bitcoin rally and don't want to cap your gains, or if you prefer growth over income. If you're uncomfortable with volatility or tax complexity, this may not be the right fit. My meter rating. Income, 9 out of 10. Risk, 8 out of 10. Simplicity, 5 out of 10. Long-term safety, 3 out of 10. Upside potential, 5 out of 10. Total score, 6 out of 10. Is BTCI right for you? BTCI suits investors seeking high